Hey everyone, Mark Volano here, Veterans Lending Group, coming to you from Lakewood, Washington, talking to you today about what we call non-QM, which is a non-qualified mortgage loan. So QM, a qualified mortgage, is basically a loan that complies with agency requirements like Fannie Mae, Freddie Mac, VA, FHA, USDA. These are all agencies, and a QM loan will be a qualified mortgage, qualifying for the terms to which those agencies can buy or insure that mortgage. So when you get into non-QM, you get into stuff that agencies won't buy. One of the non-QM items is ITIN, ITIN, and what this stands for is individual tax identification number, and it's basically for individuals who are not American citizens. They are a non-resident alien. Basically, they're here working, and they are not a citizen, right? So they don't have a social security number, and there's a lot of different variations of how an individual can be basically identified by USCGIS. But what this is there's difficulty in qualifying for these ITIN programs. Okay, a lot of times for home buyers, home buyers who would qualify for an ITIN program would have to be bringing in 20 to 30% down, which can be very difficult. So the reason I'm talking today is because there's a program out there that I found out about today. It's called an equity share program. So it's basically an entity signing on with the individual to get the FHA loan approved as an ITIN loan. The borrower, in conjunction with the third party, is basically able to sell the loan to agencies. Okay, there's a 3-year hold on this, so there would be a prepayment penalty up to 3 years for the buyer. It is a 3.5% down payment, but the fees that are rolled into the front end of the loan here to pay for this equate to a total of like 10 to 12% is what this rep that I was talking to earlier today told me. So that if I have to come up with 10 or 12% versus 20% for the just satisfying the down payment, closing costs on top of that 20%, it's a lot better deal to go with this ITIN equity share type program that will allow you to do 3.5% down payment. Then all the other fees in the transaction equate to a total of what would, in conjunction with the 3.5%, be 10 to 12% in total. Okay, so equity share sounds to me like buyer holds the property for however long they need to, 3 years in this case, and sells and has to split the equitable appreciation or whatever their proceeds were with the entity. That's not the case, okay? The entity is paid by those upfront fees that are being paid in the transaction. These could be acquired through a seller concession, okay? I had an agent that I was talking to last week. He was saying he was having difficulty with ITIN borrowers. He had worked with a couple lenders that were helping him to do those deals, and they were not able to get them done for whatever reason, or they were really tough to work with. So I started digging into the options a little bit more, which is when I found this one. So if you are an agent or you're an individual who is looking to use your ITIN loan, then reach out to us, because we may have an option for you there that gives you some purchase in this space where there are not a lot of loan products that are available to you. But this equity share product is, and it's cool. So I wanted to inform you about it. Let me know of any questions. Feel free to reach out, and I hope everyone's having a good day. We'll talk to you soon.